welcome to Getting Your Money's Worth, the show that focuses on value. I'm Judith West, and our guest today is Robert Intelisano, founder and president of his own life insurance life insurance and health insurance consulting firm. Right?
Yes, we do life, health, long-term care.
Long-term care, okay. Assorted insurances,
yes.
Okay. And you have a big pedigree, CLU, LIUF, and what other one did I miss?
CSA.
CSA, okay. So CLU means you're certified in life insurance.
CLU is certified life underwriter, and CSA is certified senior advisor.
Okay, so we know that your pedigree is people listening, they get their money's worth. Okay,
I like to think so,
right?
yeah.
Okay. Thanks for being on the show.
Sure.
You know, there was a thinking pattern, Robert, that people bought life insurance to protect their inheritors, to leave money for their spouses if they died. And once they bought it and they paid for it, they put it in the safety deposit box, and they didn't have any more worries. When they died, they knew that their spouse or their children or whoever the beneficiary was would get the rewards of their forward type of thinking and paying for it, and that would be it. But those days don't seem to exist anymore. What happened?
Well, it's a good point you're bringing up, Judith. A lot of the companies, a lot of people back then, especially in the 70s and 80s, bought what's called whole life insurance or dividend-paying life insurance policies. And because of the economy and interest rates, a lot of those insurance companies have not fulfilled their promises.
Well, let's just go slow. I mean, I've spoken to people who bought life insurance when there was an interest rate of 8-point-something%, 7%, 6.5%. And I don't know that people realize that the death benefit was dependent on that interest rate staying at that certain level. Well, is that the way it was?
In many cases, depending on the type of the contract, that's true. And a lot of the brokers are somewhat, I find a lot of situations where we're cleaning up after mistakes, where a lot of brokers are a little short-sighted and they're projecting current interest rates going forward, but you can't assume an interest rate is going to stay at 7 or 7%.
Well, listen, Robert, I mean, it's no different than real estate people assuming that prices on houses would go up forever. You know, there's a reason why trees don't reach the sky. Stocks don't go up forever, and housing prices don't go up forever. And I have to say, I think that many consumers, and I'm throwing myself in, and I consider myself to be a smart consumer, didn't really read that very fine print in the policy contract that said death benefit is dependent on interest rates or something like that, some words to that effect. So that's something to watch for now, right?
Definitely, and there's the insurance companies, they don't send these out, but we always recommend each year you order what's called an in-force illustration, and that gives you a snapshot of what's going on inside those policies each year.
So who do you get that from, your insurance broker?
The broker should be providing it, or you can order from the home office itself and bypass the broker.
And so that every year, but you know, the word life insurance seems to, in death benefit, seems to mean that you think you're buying something and you're done.
Well, you're making a good point, and you know, my thought is that you're buying life insurance for peace of mind, and you should have guarantees.
Yeah.
And what's happened in the insurance industry, Judith, is that it's a very reactionary industry, and a lot of these companies had policies that were not fulfilling their promises, and so the newer policies now have what's called no-lapse guarantees. So if the policies run out of money, the death benefit protection remains, and the heirs will still get their money.
So what is that called? No-lapse guarantee.
No-lapse guarantee.
And a consumer that's thinking of buying a life insurance policy should look for that, right?
They should, and also we found that consumers that have bought policies in the 70s and 80s, life insurance is one of the few types of insurance where rates have actually gone down. The Bush administration at the end of 2008 mandated that the insurance companies align their mortality rates with the 2001 census information. They were using 1985 information.
And people are living longer now.
That's right. So what happened was a 50-year-old man in 1985 was living to about 75, and now a 50-year-old man in 2001 is living to 82 to 85. So it's an extra 10 years of premium, and they were overcharging. So the insurance companies have dropped rates between 10 and 35%.
So, but that increased lifespan is a benefit to the insurance companies, is it not?
Yes, they've been benefiting because they've been collecting more premium and overcharging. So
wouldn't you think then that it's kind of an oxymoronic, that the insurance companies are collecting more premiums, but yet there is this problem now with some of those in life insurance policies that they're not paying off what they promised?
That's a good point you're making. I mean, it's the insurance companies. You know, there's a lot of red tape there, but the insurance companies, if it's not a dividend-paying product, they don't have to show a certain return on those policies. They can base it on interest rates. So their performance, depending on what type of contract, the company performance doesn't necessarily have a direct
so this show is called Getting Your Money's Worth. So
yes.
let's emphasize what
sure.
Folks that are buying life insurance policy should look for this line item, a line in the policy guarantees.
Well, it's called no lapse guarantee.
It's called no lapse guarantee.
Yes.
Now, let's take a few minutes to talk about what should people do who find that what they thought they had signed on the dotted line for the rest of their life. What should they do when they discover or when they're told that their death benefit is not going to be what they thought as far as in dollars? Do those folks have any options?
They do, and I find about half the business we have coming in now are from situations where we have to somewhat clean up a situation.
So how does that get cleaned up, Rob? Are there options for doing that?
Well, there are options. The older policies, up until about 4 or 5 years ago, no lapse guarantee didn't exist. So if you have someone that took a policy out even 10 years ago, they'll say, well, it may cost too much because I'm 10 years older. However, because rates have gone down between 10 and 35%, we find that we can still help people improve their position. We had a woman come in the other day, and she had a $30,000 policy, and we were able to, an older policy, we were able to reposition that into a new policy for $50,000, and she didn't have to write a check.
Really?
Yes.
So an existing contract that may be paid up or almost paid, can be converted to some other kind of a policy that might even increase the benefit?
Yes.
At no additional cost?
Yes, she didn't have to cut a check because the mortality, the pure insurance costs are lower.
So the thing for folks to remember now, Robert, is that the increased longevity has been a boon for insurance companies, and as a result, there ought to be some give back to consumers. Is that a good summary?
It's a good summary, and that's what the Bush administration mandated. When he came out in 2008, he said by the end of 2009, the insurance companies will have to drop their rates and realign their mortality.
I want to ask you something. Who's supposed to tell insurance holders of this? I mean, if the insurance company that wrote the policy doesn't go out of their way to give you that option, I mean, at least
they usually don't want to tell you that.
They don't want to tell you that. Well, so who are people to turn to?
Well, I mean, their reps should be, in touch with them at least once a year, to give them an annual review. Really, it's the reps I find that are not in communication as much as they should be.
Right, and after all, they earn money on their they have a commission on the policy.
Well, the reps earn the majority, if not all, of their commission the first year. So, servicing
becomes
something that not every rep I find takes that personally.
Right. All right. Well, that's something that the kind of work you do, that you help out with that.
Absolutely. It's kind of like going to the doctor for a checkup. You got to find out what's going on.
Or going for a second opinion.
Exactly. Good point.
Good point. Okay. So. We want to leave with a second opinion, and best of all, if you're considering buying one, look for this no lapse
guarantee. This way, no matter what happens, you don't have to worry about the market, interest rates, the economy. You have guarantees.
Now, let's shift gears.
Sure.
You have a couple of other strategies that you do, but since we're talking about longevity and life insurance, is long-term insurance a good deal?
Well, long-term care.
Long-term care.
Yeah, we could do a long show on that one, Judith.
Yeah, but we're not going to do a long show.
No.
We have a few minutes left, but it ties in with what we're doing, the life insurance and longevity. So I've heard pro and cons. Some people say, it's not worth it. You pay for a lot of stuff, and then when you want it, you can't get it, and blah blah blah. Your opinion?
I would say situational. Long-term care, only 10% of people 65 or over have the contract.
Really?
And there's a 1 in 2 chance of using it, so it's got a high probability of usage. But a lot of people say, well, what if I don't use it? I lose all the money.
Right. Now,
there are some alternatives to that. There are actually now asset-based annuities that have long-term care riders and life insurance policies where you can get a long-term care rider instead of having to pay a $5,000
So you could ask for these things. But I just want to say one thing about that. if I don't use it, I lose it. Isn't that the whole concept, except for maybe life insurance where there's a guaranteed death benefit? But, I mean, isn't that the whole concept behind insurance? I mean, no one wants to have a fire to get their money's worth out of fire insurance, and no one wants to have an accident with their car to get their money out of automobile insurance. I mean, the word insurance means to insure you against a loss.
Exactly. Insurance companies are supposed to take the risk off the individual.
Yeah. So, I mean, why should you think that if you don't use it, you lose it? You're paying for that risk control, no?
You are, and there are ways of decreasing your premiums. You can have longer waiting periods. There are strategies to pay less premium. A lot of people say, I want to pay $5,000 or $8,000 a year for a policy.
So, okay, so really what we're getting around to is the fact that, like on many things, like the life insurance and maybe the health insurance and now this long-term, it should be like anything else. You should shop it around.
You should shop it. Rates have gotten very high recently.
Right, but I mean, but folks have a tendency, they find that they meet a man, they buy their insurance, and they don't really check out any other options.
You're right,
and that's not a good idea.
That's not, which is why I used to work for one company, and everything had to go through one company, and now I'm independent.
Right.
So one of the advantages I have over a broker is that we have over 100 companies, so we do the shopping for the client. So
exactly.
You're right.
So I mean, it's almost like, you know, it's almost like going online and going from one airline ticket site to another or something. It's almost like a version of Priceline or something for insurance.
That's a good analogy. So I also equate it to a little bit like auto insurance.
Yeah.
You want to shop it every year. If the company has a large loss ratio, they're going to go higher the next year than the other company.
That's a good point too.
Yeah.
And one should also be concerned about the credit worthiness and the solvency of companies too.
Absolutely.
Where can you find that kind of information out? Is that something you can find online?
There are ranking companies. There are 4 different rating agencies: Standard & Poor's, Moody's, Duff & Phelps, right. And there's also a rating company called Comdex that does it's a rating of the ratings. In other words, they take the 4 major rating agencies and they put a number between 1 and 100 on the company.
Okay, so. You know, this show is getting your money's worth, and in public disclosure, I know you from having actually worked with you myself. I guess the best way to leave people with a summary of what you do is to focus on this business of investigating, checking, getting another opinion before you put your money down.
Absolutely. It's about protecting your assets and at a reasonable price.
At a reasonable price. Okay.
Yes.
Well, thanks for being on the show. Thanks for helping me personally, and thanks for telling our folks how to get your money's worth on life insurance, long-term insurance, or certainly at a bare minimum, how to protect what you are doing. Thanks for watching.